Welcome to our Friday Insights. I'm Leslie Cliff. I've got with me Justin Hahn, our economist, and let's just get right into it because it was a very busy week, starting off with a holiday. So 4 busy days was Martin Luther King Day, and so markets closed Monday. But Justin, what struck you? What are all the things that went on this week?
Yeah, so as you mentioned, it was quite a short week with Martin Luther King Day and the US markets closed. It also was short due to all the eyes being focused on the inauguration of Joe Biden. Markets this week were pretty strong on the back of Joe Biden's inauguration, helping boost the stocks higher. In particular, we saw a lot of the growthier tech names outperform, also on the back of partly due to Netflix's earnings and strong start to the year and anticipation to some of the earnings ahead. In addition, we saw a preview of some of Joe Biden's policies and plans, such as a $1.9 trillion stimulus, as well as the climate agreement returning back into the Paris Climate Accord, as well as potentially creating more stimulus to that sector.
I'm just going to stop you for a second there, Justin, because I just have ringing in my ears all kinds of people telling me for the last couple of years that it would be a disaster if the Democrats get into the White House, and a further disaster if they control the Senate and the Congress. So now we have the Congress, the Senate, and the House all Democratic, and the market going up this week. So how can that be?
Part of the reason is because the markets don't expect Joe Biden to be able to do anything that extreme that he wants. Some of the tax plans that he has in place probably won't get passed due to the COVID situation, and there would be a lot of negative backlash if he were to pass an increase in taxes there. And markets generally view Biden as more neutral and good for global trade, which is also good for a lot of the multinational companies in the US. So although there are some negatives, there are a lot of positives that could come out from this, and a lot of the negatives won't be passed until later in the year, and the market hasn't discounted it in the short run yet.
It's just so interesting. The market's so good at digesting information and being objective. It just shows all of us we have to be so careful of our news sources and think for ourselves. But let's get back to what happened this week. So we had great movement in the tech sector. I'm interested in this rotation we've done in our portfolios back to the barbell, having the COVID winners like the tech stocks, but exposing ourselves more and more to the economically sensitive, industrials, financials, and so on. So the value stocks had a poor week this week. Tell me about the rotation in the market.
Yeah, so the first few weeks of the year actually had a really strong performance for the value sector, as well as financials and small cap. We saw financials outperform significantly, but pulled back this week due to some of the earnings from, I believe it was Bank of America and Wells Fargo missing revenues there. So it was expected a bit of a correction. They were a bit overbought. And on the flip side, we saw Netflix with the strong earnings to start off the tech earnings. So we saw the markets this week rotate slightly more towards the tech sides, with value underperforming, as you mentioned, in anticipation of some of the earnings coming up next week from the big tech giants such as Google and Apple.
Okay, coming next week. And we don't know the new regime, what their view is going to be on deregulating the tech stocks. Is that something that's accepted in the marketplace, or?
Yeah, so in terms of deregulation, there is still a little uncertainty on what Joe Biden's plans towards that sector is. He has historically been a bit more negative on them as well, similar to Trump, but not as extreme, I would say. But there's still a lot of uncertainty on what's going to happen there. The tech stocks are a bit too big, in our opinion, and control a bit too much, but it'll be interesting what they can manage to do to break them up or add a little more competition in the markets.
Right. Do you think this will persist? Do you think value's back on the shelf, back in the back of the shelf for a while now, or is that just a weekly event?
We view this more as a weekly bump. Going forward, there will be a global economic recovery and a synchronization once the vaccines roll out, and we'll see these value stocks and more of the defensive sectors and economic sensitive sectors do better, such as materials and financials. So longer term wise, we think if the economic recovery continues to gain momentum, we'll see value stocks continue to outperform, as well as small caps.
So we're not lightening up on the side of the barbell with have the value stocks, right? So next week, next Thursday, we're having our annual Look Back, Look Forward seminar, and this year it's a webinar. We have over 300 people signed up for it. I wondered if you could give us a little sneak preview of what might come out next Thursday. Not too much, just a teaser.
Yeah, so next week we'll be focusing on the broad theme of the shock and awe from all the central bank and government stimulus, coupled with the hopes of the vaccine and how that will tie into more of a synchronized global economy going forward. Wayne will also be giving some insights on how we'll be picking up the pieces after this massive stimulus and what are the repercussions of this stimulus going forward.
Right, so we're busy preparing and looking forward to presenting that next Thursday. And I think that that really is a good wrap for the week, Justin. We hope you can join us next Thursday, and we hope you realize the days are getting longer, and there is light coming more and more all the time. We really appreciate you spending the time with us, and we look forward to seeing you next week. Thank you very much.
Thank you.